Hi, thanks for tuning in. This is a quick look at the daily chart of the S&P 500 index futures, and you can see that in the background we had supply drawn out down here, and then in response the market could only produce a modest rally on 3 million contracts. The pullback was only modest here, and then when the market attempted to respond on 10.8 million contracts, the highest upside volume we've seen across the chart, it couldn't even challenge the highs of the range because supply was being drawn out up here. Price pulled back in response, and then when the market attempted to push higher again, only 1.5 million contracts could be put together for the push higher. The buyers were exhausted here, and the sellers were going to gain control. There was a modest pullback, and once again confirmed that there was no sellers in the market, with only 2.2 million contracts towards the upside, and then the supply began to be drawn out. You can see 7.6 million contracts to the downside, 5.5 million contracts to the downside, and 5.1 million contracts to the downside. And we've seen some strength emerge here. You can see this little box I've drawn is representing a reversal of sorts down here. There's an attempt to recover up here. The market pulled back just below the important level last week to close back right at this breakdown line here, the lows of this bar. And the market's actually well placed to make an attempt to push higher in response if trading conditions allow. You can also see that the market has gathered up 5.6 million contracts to the upside and 5.8 million contracts to the upside here. Compare that to the 1.5, the 2.2 and the 3.6 here. There's actually some buying support coming into the market. It's not actually being reflected in the prices at the moment. The market's attempting to build up some strength, and it may attempt, if the trading conditions continue to be more positive, to push higher in response. This is the first signs of the market seeing some buying support emerge. Now, there's always a risk getting into early at these stages, because if things go wrong, this buying support will be dumped and price will just push lower again in response. But at this point, there's a modest attempt to support the market. Just see how that develops. Here's the daily chart without the wave lines on it. You can see that the market has broken down here at this line, pulled back to the next level, was unable to recover, and then pulled back. This is almost like a shakeout over 3 bars here, this reversal. And the response to that was a push higher. And then on Thursday, price pulled back below the previous bar's low and recovered to close at the important level. That's the breakdown line from this bar here. So it's in a good spot to push higher. You'll generally see on Mondays in these markets a modest test for supply early. Sometimes it's only for half a day or so, just to see how much supply is in the market. If there is supply being drawn out, you'll get a deeper test for supply or even a pullback. And if there's not much supply in the market, price will probably make an attempt to push higher. It's not necessarily going to be successful or guaranteed success, but there'll be an attempt to push higher. And if it was successful, the next higher level comes through here. So you can see where the market would go if given a chance into this level here. But you've had price reverse down here with some strength being found, a push higher in response to confirm that attempt to support the market. Last week was a bit awkward with a pretty wide spread trading below the previous bar's low briefly before recovering. Not a great look. So you might well get a test for supply early, which is pretty common on a Monday for these markets, and then a response to push higher if supply is found to be low. And if that's the case, I'm expecting it'll push into this level above, possibly testing but not challenging the highs above, and then trading sideways within it for the rest of the week in consolidation mode. Remember that this is just an early sign of buying support emerging, and there's inherent risks involved with trading too early in these markets, because if sentiment changes for whatever reason, any of this buying support will be dumped and price will slice lower with an increased spread on increased volume. So just be aware of the risks involved when trading the early signs of buying support emerging in a downtrend. Okay, thanks for your time. Back again next week. See ya.